Let's talk about making extra income before you leave to go to work each and every day. All right. So for someone that's interested in maybe possibly making an extra 200 to maybe 500 plus, dollars a day, because when it comes to trading futures, the sky is the limit. But be very mindful that this is it is risky because we don't control the markets as retail traders or traders at all. The institutions, the market makers do. So we just want to trade along with them based on the moves that they make or we see them making and taking our trades. So, again, this video is about making some extra income before you go to work in the morning. And maybe you leave too early and maybe you have to possibly have interest in trading in the evening, okay, or the afternoon sessions, okay? So, I mean, the beauty about trading futures is that we have the New York session, the U.S. session. You have the Asian session, which, opens up on Eastern time, my time, at 6 in the evening. And then the London session, okay, which just opens up 2, 3 in the morning, wee hours in the morning. But the future markets are open 23 hours out of the day, okay? So 5 days a week, all right? So you can do so. Making $200 is fairly easy trading futures. Depending on the market you trade, okay, and how much money, you have to actually trade with. I always recommend to people who are individuals who are just starting off trading and you've got some experience under your belt and you want to give it a test or try, start with the micros, okay? Because that way you're not leveraging a lot of money unless you're trading a lot of contracts in the market. Micros is a good way to prove to yourself that you can trade and then maybe step up to the E-minis futures, okay? So, because I trade the indices and most individuals that are part of our Discord community, and if you're interested in joining the Discord, the link is down in the description portion of the video. It's free. They also trade the equities or the indices as well. So, anyways, let's talk about. I just want to show you like how fairly easy it is. Okay, the strategy and the way I trade just all boils down to just using two charts in a sense, but I trade range-based charts, and I like to look for confluence and confirmation of market before I take my trades. So I use a higher base chart to mark a zone and then a lower base chart to get into an actual trade. All right, so say for example today, and this is an entry that I posted over on the Discord today. I posted 2 trades that I took, but 2 trades out of a few that I took today. I took, I think, maybe 3 trades today, but the 2, I did post 2 of them over in the Discord community. Sometimes I'm not able to record every single trade because something may unfold and I can't get my recorder going quick enough. But anyways, let's talk about it. One of the key things I'm always looking for is looking for a break of structure, and identifying the market direction. In this case here, the market is moving to the upside, so we have structure breaks to the upside. Pushes up, pull back, break structure, pulls back, break structure. Meaning we're taking out highs each time we run and make a new high, okay? So around about shortly after the market opened up, say about 9:40, 9:45-ish, the market broke structure up here, then it pulls back, okay? Now when it did pull back, it pulled immediately back. There was an area of demand. This is off of a 120 range chart though, so let's get that correct first of all, okay? We're not marking up a zone off of the, we're not taking on trades off of the 120 range. Again, I said I mark up my zones, right? So this is the zone right here. So from there, all I'm going to do is just go over. I'm going to bring this across on all charts so you guys can see this. And now I'm going to go over to a 24 range chart, okay? You could also use a 60 range chart. You mark zones from there and then use a lower time frame, maybe like the 12 range chart, okay? But let's move on down to the 24 range right quick. So I had this area marked, right? Let's pay close attention. Let me see where it actually happened at. So this is the zone on the 120 range. So the market goes up there. That high is that's the high that you just saw over on the 120. This high right here. All right, okay. So the market pulls back. It's starting to break structure lower. It taps into the zone. We are into the zone. But what we're looking for is a demand setup to be able to take the trade in the same direction as what's going on the higher base chart. We're breaking structure higher, breaking highs. Let's look to take a pullback to go long. The market pulls back, okay, and it still hasn't really broken to the upside and gave us a demand area where we get the rejection to push higher. Now, when it taps into the zone right here, and it makes this pretty much this low right here at 20,720, for example, it starts to push higher, okay, and then we get a demand set up to where it's making aggressive buying to the upside. All right, you see that here. So it takes this high here out, break structure, runs to the upside. So we get, push up, pull back, breaking structure higher, demand area here, but it doesn't immediately come back to that area. Look what does take place though. So we're waiting for the market to come back to this now zone on the 24 range chart, which I'm gonna mark up. So we're looking for a higher base zone and then a lower base zone. And then once the market taps the lower base zone, in the demand set up on the higher base, demand set up on the lower base, this is that zone right here. I'm going to mark it up. The market comes back to it. Once we get the break and close of a candle in the opposite direction, meaning we're looking to go long, right? The direction was coming back, meaning a pullback to the lower base zone. We're looking for a bullish candle there where it breaks and closes above the last down bearish candle. When it does that, look what happens. It pushes up. Now, this is the trick right here. Sometimes they would do this, and I've said this in many videos. If you put your stop loss, let's say right here, okay, at the back end of where the bullish momentum started at, once it tapped into the lower base zone, they stopped you out. We're talking about that was 20,724 and a half. They came down just 4 ticks. That's why I said always give yourself a few points breathing room on the back end of your stop loss area, because right here all they were trying to do was run people's stops, and then boom, what does it do? You've probably seen this time and time again where that happens, where you get stopped out and then the market goes in your direction. They know people are entering right here at this area of aggressive buying that took place right here. It comes back, and they know people are going to buy right here, so they're going to test people's stops right there and run it, and then pick up liquidity and then move the market in the intended direction. So when I saw this right here, what I was interested in was that it was going along in this area here and aiming for it to run up and take out, or at least fill the remaining portion of this gap that was resting right up here, okay? And it goes up here and eventually fills these gaps up here as well. So there was a small gap that needed to be filled here, so that needed to be filled, as well as up here. So this was a beautiful long entry to take. But again, all we're doing is a step-by-step thing I like to do. Look to see if we're breaking, which direction we're breaking structure, meaning looking at market structure. We're moving to the upside or downside. Moving to the upside, I'm only interested in looking for demand setups. Now, another thing you can pay close attention to too, if you use it, is like the VWAP, okay? I'm not going to like harp on this or talk heavily about it. And lots of times what you'll see take place is it adds on another layer of confluence and confirmation in a sense. We had a 120 range demand zone, right? The market pulls back to it. Once we get a clear demand setup to go long and it comes back, so we mark the zone up, look what takes place. We break above what? The VWAP. So once we're already bullish, we're coming back to demand, we break above the VWAP, that's kind of more confirmation to look to take an opportunity to go long. So here's a trade that I actually took. It's right here. This is the long setup that I took in that area there. Boom, went up, and I was aiming for this area here and up in here. But I went ahead and took out right here though. So either way, the trade did work out for me. That setup there, and then we'll move on and take a look at another example here, because these are just simple and easy ways in which you can actually, make extra income trading, and it's pretty easy to pick up $200 a day. So if you equate that 5 days a week, if you trade 5 days a week doing that, then you pick yourself up an extra $1,000 a day, and that could be a little bit over $4,000 a month outside or in addition to your main income source, okay, meaning your job. All right, okay. So then the market pushed lower. We broke structure below here, pulls back, taps into pay attention here. Yeah, this area of supply resting right up in here, okay? And you can look for rejection and go short from there. All right. So we just move down to, let's say this was our supply zone here. Okay. Aggressive selling coming out of this area, moving lower, breaking through some areas here, some structure, pulls back, boom, taps into this area of supply right here. Let me make sure it tapped into it 100%. Yep, pulls back, taps into it. Once it taps into it, we just move down to the 24 range, for example. Now, again, you can do this using, time-based charts, tick-based, volume-based charts. All I'm doing is marking up zones and using to where I have multiple confluence. One chart, higher base chart, higher time frame, whatever, mark it up, and then moving down and waiting for the market to tap back into that zone. In this case here, pull back on the higher base chart to that zone, and then look for a setup. In this case here, it would be a supply setup because we're looking to go short on the off the 24 range for me. But again, you can use whatever pair of charts you want to use or chart styles you want to use. So the market taps into the zone. I'll just go ahead and do this so you can see it. All charts, go back over, Boom, we go down to 24. Now you see it. It comes back, it taps right into it. Now, this is beautiful because the fact is, when it comes back to it, it doesn't break and close inside the zone, which I like. They wick that area there, and all I'm looking for is a supply setup. Pushes down, pulls back. Beautiful area of supply, creating a supply setup here off the 24 range. Once the market pulls back to the supply zone, which is right here, that it creates for me, right here, I look for rejection. Break and close of the candle. Look where the VWAP is at. We are breaking below the VWAP, pulling back to it, but we're not breaking above it. We're closing below it, and then the market runs lower. If you look, and then you say, well, where should I take my trade to? Your stop is going to go on the back end right here at, this is the supply zone. So the stop's going to go in back on the back here at 20,730. Give yourself maybe 2-3 points breathing room there. Wait for the break and close of the candle. You can take out most of your contracts. I mean, right here, if you've got multiple running at 708. So let's say it taps into the zone and we get the break. So maybe you got in somewhere, I don't know, right around 723. You can take out most of your contracts at 20,708 or a half, and then you can allow it to come down here. There's voids. So what I like to do is say, okay, where is the most recent area of liquidity that the market can run? Well, of course, it's going to be this low that it made on the move to the downside, right? Then it pulls back and it breaks lower here, creating this area of supply. And on the pullback, it creates a low right here. So of course, we want to see it run that low there. But the goal is to run down and take out this liquidity right here. Okay, all right, where the major low was at, or yeah, right here, this low right here. Or you could aim for that area there, or you can aim for it to fill these gaps in right here. So the gaps, liquidity, any means of liquidity or gaps that where the market rejects, and you can say, look to the left hand side and say, okay, I see where there's some gaps that need to be filled right here. So I think so. Let me see here. Yeah, there's a little small gap right here. Talking about fair value gaps in a sense that need to be filled. And then you got liquidity resting out here. But of course, we want to see it run 20,708 first. Come down, fill any gaps in this area here, and then maybe possibly what you can do is let it run your last contract or so to take out liquidity here on the bottom end. So that was a beautiful setup right there. And there's another setup here I'm going to show you right quick. Again, you take a trade like this, you get in around 23, 22. Even if you ran it down to 20,708, you pick yourself up there about 14 points right there. One trade is all you need, okay? And if you do that, you can, make money and build an account. And this is just extra income. That's what we're talking about. Making money before you go to work each and every day. All right. So again, let's look at another trade setup right quick. Let me take this off so I don't have all this stuff across all my charts. All right. Another setup right here. Pushes lower, pulls back, tap supply, break structure. Okay. And then it moves lower right here, creates another area of supply right here. So pull back, key area of supply. We have an area of supply that it pulls back to. This is around 115, 120 in the afternoon. So we'll move down now to the 24 range right quick. Okay. And at this point here, we're just looking for pretty much a supply setup. Market taps that higher time frame supply zone, pushes lower, pulls back, aggressive selling. This is supply right here, but this is a low probability zone. If you want to take the chance there and enter it once you get the break and close the candle, it's fine. But it does pull back to this area of supply right here off the 24 range. But it also, when it pulled back, it pushed lower and took out this low right here, pulled back, tested this small area of supply right here on the 24 range, and then you wait for the market to basically on the pullback to this area right here to break and close lower and then go short. All right, and what we're going to aim for is for the market to definitely come down and fill in any gaps and possibly run this area of liquidity right here. All right, there are if you want to call these multiple lows right here or double bottoms right here. But anyways, so the market rejects the area of supply and you take the trade, you're going short. And what does it do? It runs and takes out liquidity just as well right there. But again, we have some gaps right here. I'm always looking to fill some area of a gap when I get the rejection or at an area of a zone that makes sense to me. I'm going to first want to fill in any gaps to the left hand side that I see and possibly allow the remaining portion to, if I can, to run it down and take out liquidity to the downside right below here at 20,644. So hopefully that makes sense. But the overall goal and what I recommend, just this is a way to really, make some extra money each and every day before you actually go to work. trading futures. Simple as that. And it's just using multiple charts, using confluence, looking for either confluence of demand zones or supply zones off a higher and a lower base chart, waiting for the rejection and taking your shot on the trade. All right. But knowing your risk is the biggest thing. Where to place your stop loss. If I got into this trade going short right here, my stop loss would have been in the back end right here at 20,675. And I'm going to aim for a target of these gaps right here and this area of liquidity right here. Okay. So again, you got into the trade maybe around 67, 60. I'm sorry, not 67. Let's see here. 65, let's say, for example, just to be safe or whatever the case is. You run it on down, fill these areas here. You get in, pick up 10 points right there. And then maybe you took off one contract or two contracts. And maybe you had 3 running. Let the last contract come down here and pick up the remaining, what is this here? I don't know, another 10 points, 12 points right there. So anyways, this is just how I would do it. And this is how I do it each and every day. Same type of trade setups that I post over on the Discord community. So hopefully this helps out. Interested in joining the Discord? That link is down in the description portion of the video. It's free to join. Right below that is another link for all those that send me DMs and ask me about how they can join or want to be part of the elite membership. For $6.99, that's where you get the trade breakdowns, where I go into detail about trade setups. There are tons of those videos already are listed on there where I go into detail about trades I've taken, where to place stop losses, where to take profit at, just kind of giving the rundown of the setups and what I was looking at prior to taking or entering a trade, as well as you get the video playlist, which is a link by link series of videos that I put together that I believe are some of the top videos to actually watch on the channel that cover the strategy. And yeah, I mean, just some perks and rewards that I give back that are part of the YouTube tier membership program. It's just your way of supporting my efforts as a content creator and me giving something back to those that are really wanting to, find a way to become profitable and either make a business out of trading or even doing it part-time. Okay. But outside of that, that's all I have for you guys. If you are a first-time viewer and you haven't subscribed to the channel yet, please take the time to go ahead and sub by clicking on the sub button. Make sure you have all your post notifications turned on. And last but not least, if you found value in today's video, you say, I really like the information here, the content here, watch some of the other videos, okay? Because you can educate yourself just as well. But make sure to drop a like on the video if you loved it, okay? Take care and see you in the next one.